Okay, I think we'll get going now. So we have about 28 people who have tuned in. Welcome. And for those of you who may not know me, I'm Caroline Riseborough. I am President and CEO of Trillium Health Partners Foundation. And it's lovely to meet everyone today, albeit virtually, unfortunately not in person, but hopefully those days aren't too far away. I just wanted to say what a year it has been. 2020 will definitely go down in the history books. But let me just say that despite all of the challenges we faced this year, it has been so humbling to see the outpouring of our community to support Trillium Health Partners during what has been an exceptionally difficult time in responding to COVID-19. And the reality is we could not have done it without your support. So let me just start by extending my gratitude on behalf of everybody at Trillium Health Partners, about 10,000 frontline staff, nurses, physicians, clinical leaders. We just want to say thank you for everything that you've done to support the hospital during this critical time. In talking about supporting the hospital, this brings me to the topic for today. We want to talk to you about what it means to put a bequest in your will towards Trillium Health Partners Foundation to help shape the future of healthcare for many generations to come. And I can tell you this, the hospital over many years has just seen the incredible impact that legacy gifts have made, that planned gifts have made, and many of the plans that were made years and years ago have come into fruition today. And our hospital could not function without the philanthropic gifts, without the visionary support that we've received over the years. And I think what's interesting is that many folks oftentimes don't realize that our healthcare system very much depends on philanthropy. And oftentimes we talk about the fact that whether it's part of a new construction and we need to raise money from the community, whether it's critical equipment, whether it is even us piloting and testing non-standard care to be able to improve care, all of that depends upon philanthropy. So thank you to all of you who have supported us over the years to ensure that we continue to create an incredible hospital and create a healthier community. So talking about those very generous and visionary donors, I am so pleased to be joined today by Sherilyn Ketchen, who is a wealth and investment management guru with RBC. And she is actually committed to making a planned gift in her will to Trillium Health Partners Foundation. Sherilyn brings over 20 years of experience in the financial services industry to RBC Dominion Security, and she is proud to be the fourth generation of her family to work in the investment business. She is a portfolio manager and investment advisor. She possesses extensive knowledge of securities and specializes in both wealth preservation and investment management. She has many long-term relationships with her clients and assists them in achieving their goals for their family, their businesses, and retirement. So I know I'm going on a little bit about you, Sherilyn, but bear with me here. Sherilyn is also fully licensed in securities, options, and insurance. She is an avid football fan, and her weekends are usually spent watching the Arsenal Football Club, what we would call soccer here. And then in her spare time, she attempts to school her children on the finer points of this beautiful game. So Sherilyn, thank you so much for joining us today. We're just thrilled to have you with us.
Well, thank you, Caroline. And also, just before we begin, I'd like to thank you and your entire team for everything that you're doing to support our community's response to COVID-19. What a time to start a job. But, you know, it can only get better from here, right? I've lived in this community my entire life, and I work in this community, and I have seen Trillium Health Partners grow into the powerhouse that it is today. And so I am very proud to come on here today and speak in this way, but also to be a donor. I'm proud to be so.
Excellent. Well, we are thrilled to have you here. So before we get started, Sherilyn's going to be answering many questions on estate planning and tax planning. The other day I called it tax avoidance. So I just want you to know this is not about tax avoidance. This is about tax planning. I was corrected there. But if you have questions as Sherilyn is sharing her advice to us, please feel free to email us at foundation@thp.ca. So foundation@thp.ca. We will do our best to answer questions. If we can't get to them during the broadcast today, what we'll do is we'll make sure that we answer those questions via email afterwards. So let's get started, Sherilyn. For those on the call who might not be familiar with the concept, can you maybe start by sharing how a gift in your will actually works?
Yes, it's very easy. It's as simple as naming a charity as a beneficiary in your will, and you can name a specific dollar amount, or you can designate a certain percentage of your estate toward the charity, and then that way it makes sure that the donation always remains in line with the size of your estate.
Great. And I understand, as I mentioned earlier, you've decided to leave a gift in your will to Trillium Health Partners. Why did you choose to leave a gift to us?
Well, I mean, I was talking about estate planning with my own father. He had started to experience some health challenges, and so we were kind of going over his estate planning, and he needed to make some changes, and he didn't have powers of attorney. So all that kind of started a discussion amongst us, and I started thinking about my own, and seeing some of the tax planning that we were doing for him. I started thinking about my own and the tax situation for me. And, one of the ways to kind of offset or mitigate some of your taxes is by naming a charity to be a beneficiary in your will. And so I started thinking about the organizations that were important to me, and Trillium Health Partners popped to the top of the list. I was born at the Mississauga site. My father had a heart attack and loved how well he was looked after, so much that he had a second heart attack and came back. I had a son. I gave birth to a son over there. That my other son wanted to get in on the action, so he had an emergency appendectomy when he was 7, and they took care of him over there. So we really used the hospital, as so many of us. I mean, we all need healthcare at some point in our lives, and so I wanted to give back for some of the great care that we've received here, and I want to make sure that the hospital continues to be such a valued partner in the community for generations to come, and for my own sons and their families, and for our community. So it was really an easy decision to make for me.
Well, as someone who was also born at Trillium and had my son at Trillium, and same thing, my family's received incredible care from Trillium over the years. Thank you, Sherilyn, for making that gift in your will to Trillium. My next question then is really about what are the benefits to leaving a gift in your will? So you mentioned about how there's a positive benefit, especially to the tax that folks pay, and maybe not everybody's familiar with just exactly how that works. So maybe you could just share with everybody on the Zoom call the benefits of leaving a gift in your will.
Okay, so just before I answer that, I just want to say that this is going to be kind of a more high-level discussion. Everybody has a different situation, and so as I did, I would urge everybody that if something that we mention here piques interest, then you should talk about it with your tax advisor and your lawyer and your investment counselor, so that you can see, how everything works together. So that's my kind of proviso to start off the top. But generally, when you're looking at putting naming a charity as a beneficiary in your will, it can produce a valuable tax credit on your final tax return, as well as the tax return from the year prior. And it can potentially save your estate a considerable amount of tax, especially if you have RSPs, RIFs, or large holdings of capital property. The reason is when you pass away, the CRA treats your assets as though you have sold them. They call it a deemed disposition, and they are deemed to have been sold at the fair market value at the time that you pass away. So this means that your RSPs, your RIFs, they're treated and fully taxed as income in the year of death, and the estate must now also pay tax owing on capital gains that may have accrued during your lifetime on your capital property. So for a gift in the year of death, as well as for the previous year, you may be able to, depending on how you've structured it and what the amount is, but you may be able to claim a donation tax credit for donations of up to 100% of your net income. So that's a powerful, that can really offset a lot of the taxes that your estate will have to pay. There are different ways of doing these kinds of things. One of the ones that you may already do throughout your life is a gift of share donations. And so just to kind of recap what that is, if you donate shares directly to a charity, any capital gains that have accrued on that donation, you don't have to pay. So it's a very tax effective way to maximize both your donation and to minimize your taxes. So just as you might do that throughout your lifetime, you can also instruct that through your will that your estate will do that. So that's another way to minimize the tax impact of a donation. So overall, I would just say in general that making a gift in your will, it's an important way to support the charities that you want to support. Maybe you haven't been able to during your lifetime, and this provides another opportunity to do so.
It's interesting. I've come across many donors in my kind of 20 plus years of working in the philanthropic sector where they don't maybe have the means to be able to donate during their lifetime, but they may not obviously need their home and all of their assets once they pass. And they have been able to make those donations after, and oftentimes at a quite transformational level at times. So let's say someone's listening to this, they're really inspired, they've benefited from Trillium over the years, and they want to be able to give back. Where do they start? Who do they talk to?
Well, in my case, I hired a lawyer who turned out to be extremely handsome. So that made it a lot easier for me. I also, of course, I hired myself as my financial advisor. I was a wizard. And I also have a tax advisor. So as I mentioned a couple of minutes ago, when you have this kind of professional network of people that are working together, you can make sure that all these different situations that you find yourself in, and the way you structure things, that they all work together to make sure that you're maximizing the bequests to the beneficiaries that you have named. So you've got your professional group of advisors, but I think it's also crucial that you bring your family in on your intentions.
Great. So how do you start that conversation about estate planning with your loved ones? Because obviously, they'll be impacted in some way. Your family maybe is hoping for some of the estate as well. But what's that? What did that conversation look like for you, and how did you start that off?
Well, in my case, I poured myself an extremely large drink just to start, kind of. Because in all seriousness, I mean, we're talking about two subject areas that aren't great fun to talk about. One is we have to deal with contemplating our own demise or the death of someone that we love. So nobody, it's human nature. We don't want to talk about hard subjects like that. So it makes us feel vulnerable. So there's that side of it, but there's also the money side of it. And that's a very private thing for a lot of people. It can be a little awkward. You don't really want to be talking about your net worth with your kids, or maybe your parents don't want you to know all that kind of information. And I understand that. So it's fraught with a bunch of awkward topics. I've had this conversation with my parents. I've had this conversation with my family. And the way that I've kind of approached it is more as an act of kindness, of compassion, because when you think about it, you can put yourself in the space of either the person that is dealing with a loved one who has passed away, or you're the one that's gone and you're thinking about the people that you've left behind. And in those cases, you're dealing with grief, you're dealing with an awful lot of different emotions. And if there's something that's a surprise that is in the will that maybe you weren't expecting, that can just kind of add to the overall feelings sometimes of maybe misunderstandings or just hard feelings. So it really does, by having a conversation, and again, you don't have to get into dollar amounts or figures like that, and you shouldn't feel like you need to justify why you've made the decisions you've made. But it's important that people know, because it can ease the burden and it can help with your peace of mind, knowing that, your wishes have been communicated. People understand the reasons behind your wishes, and they can help to make sure that they are finally met.
Great. And I think it's interesting. I mean, the adage goes that there's only two things that are certain in this world, which is death and paying taxes. So why not actually have a conversation about the two of them?
Well, my father told me that we didn't need to have a conversation because he would outlive me. In fact, he may never pass away. And knowing him as I do, that could very well be true. He could, but we had it anyway. I forced him to. It was no fun, but it was done. And I, like I said, I think it is important that everybody, people that are impacted by it, have some idea of what to expect.
Mm-hmm. Great. So Sherilyn, you've given us kind of a lot to think about in terms of having those initial conversations, starting to talk to our families, starting to talk to lawyers and investment planners, tax planners. And you've also shared with us your own experience, which is fantastic because you've actually lived this yourself. But I think that there's a lot of myths out there about estate planning. And the number one objection is of why 63% of Canadians say they are not interested in leaving a gift to charity is because it means that their loved ones will have less. So there's this sense that it's a zero-sum game. And there's just, again, a lot of myths out there. So I'm hoping we can dispel a few of those together. Should beneficiaries be worried that a gift to a charity in an estate plan would mean less money for them?
No. Yes, there is that perception out there that you have to decide it's one or the other. Again, sort of the biggest drain, if I can use that word, the biggest drain on the size of an estate left behind are your probate fees, your taxes, right? So anything that you can do that kind of tries to mitigate that impact will have a measurable benefit for the estate. So you can choose to include a charity, and because of the many different creative strategies that you can use, some of which are, say, for instance, insurance planning, they can generate tax savings, and it can enhance what gets left to the family. So, the insurance discussion is a little bit of a detailed one. I think we should probably leave for another webinar. We could get together again. But it is a way that you can make sure that both the charity and your beneficiaries will all benefit from your largesse. There's no reason why it would be exclusionary to one or the other.
Okay, so myth debunked then. So leaving a planned gift in your will to charity does not mean that you'd be taking away from your beneficiaries. In fact, it has a positive effect both for the charity and for your beneficiaries because of the positive, let's say, tax implications that it might have. So moving to kind of another myth out there is that you have to be a multi-millionaire to be able to make a planned gift. You have to have lots and lots of money to be able to make a planned gift. Is that true?
No. Myth debunked. Okay. No. And I'm sure you can speak to this far better than I can, Caroline, but you know, any amount that you decide that you want to leave to a charity is going to be gratefully accepted and used by that charity. And in fact, not to now turn myself into a neurologist, but since we're at the Health Partners Foundation here, I can say it was interesting. Making a gift or giving actually produces a positive feeling of happiness. Scientifically, they did a study, and let me just see, in 2008, UBC and Harvard co-authored this study that showed that giving will actually make you happy. It stimulates neural activity in the areas of the brain that feel pleasure. So there you go. Science tells you, even science will tell you, that making a gift makes you feel good. And especially, as you know, in the times that we're living in right now, anything you can do to try and make yourself feel good, I say let's go for it. So yeah, myth debunked.
It's true. Actually, they found that even making a donation, let's say after you've used hospital services or gone through a stressful time, will help to improve your healing, because you're doing something that feels good, that de-stresses, and it helps you heal more. So believe it or not, philanthropic giving can be healing as well and have impact for the hospital. And I think too, just going back to that whole myth of the fact that, you know, you can only give a planned gift if you have millions and millions of dollars. It's not true. I mean, we have gifts that are $500 to $10,000 to $1 million and everything in between. And it helps the hospital meet some of their most urgent priorities. And just a quick story, we had a donor, his name was Remy. He was a grateful patient of our cardiac program. He made a $10,000 gift in his will not long after the program was established, and he wanted to support advanced cardiac treatment technologies. And his gift materialized. This was a number of years ago, and he actually helped us to re-equip one of our cath labs, and our cath labs are key because they just really ensure the shortest time of treatment for folks that have heart attacks. We can go in and treat you straight away. So this was just a great example of someone who had benefited many, many years ago, passed, and then was able to give back to the very program that he had benefited from. So here's a question, and I'm sure some of you are thinking about it. Sherilyn, another maybe myth out there is that you can be too young to consider a planned gift. True or false?
Well, I know I'm no longer too young, but no, no, you can't be too young. In fact, some of the strategies that we talk about in terms of planning for estates are better when you start them younger. So that insurance piece that I mentioned, some younger people, if you are building an RSP and you name the charity as the beneficiary on the RSP, that gives it time to grow. So you're starting out early and you're just kind of building that asset over time. The other thing though, aside from just a pure dollar amount, you know, one of the reasons why I decided to add the foundation in my will as a beneficiary is I kind of grew up in a family that was philanthropic. You know, my father donated to the hospital because his parents were very active back in the very, very early days of at the Mississauga site here. And that was something he wanted to carry on. And in turn, you know, it's been kind of a way of life for me. So that's something that I want to carry on again from those generations. And by again bringing my kids in on my my intentions, I'm hoping that they're going to also carry on that legacy. So getting, you know, kind of getting the topic up and seeing and giving from an early age. And the other thing I'd like to say, which is interesting, I think millennials and Gen Z tend to get an awful lot of flack from those of us that are a little older and think that they're all self-absorbed and, you know, who cares. That cohort is actually more philanthropic and continues to grow in that area beyond actually the older generations. So let's give them a little bit of credit. I think that it's becoming an awful lot more important to younger people. So no, you're never too young to start, never.
And I think just on that, I thought maybe it would be great to share a story here, and I might just go and read some of this. But we had a family who actually had their son spend his first Christmas in the hospital, and their son was under 5 months old. He had respiratory issues, and it led to a 2-week stay in the pediatric unit at the Credit Valley site. And what was wonderful was that the young boy successfully recovered, and his mother actually stayed every single night to watch over her son, and she was just heartbroken that her son and his sister had to spend Christmas in the hospital. And then to our surprise, they made a donation in honor of the care that their son received, and decided to make a gift in their will to ensure that children would be taken care should anything happen to them. So it was, again, just a wonderful story. Their son was only 5 months old, and they decided to make a planned gift because they were so struck by the wonderful care that they received, and that was their way to give back. So even a young family can make a gift in their will. So Sherilyn, thank you for debunking some of these, I think, misconceptions about planned giving. If you're okay, I want to shift to something else now, which is some of the questions that we received in advance. So thank you to those of you who sent in these questions, and we hope to address them. Again, if you have more questions about what Sherilyn has shared, you can email us at foundation@thp.ca, and we will make sure to answer any more questions. So here's the first question that we received. Are assets distributed through a will still taxed?
So yes, as we talked about earlier, when you pass away, your assets are deemed to have been disposed. So they're deemed to have been sold, and they're sold at fair market value at the time of death. And so basically, what the estate will pay taxes on that growth. Your beneficiaries, not the charity, but say your personal beneficiaries, assume their assets at that fair market value, and that becomes sort of their cost base moving forward. So future growth would be taxed in the beneficiary's hands. The estate has paid the estate tax for anything that fell under the purview of the will.
Great. However, if you make a charitable gift, just to recap what you shared earlier, that will actually reduce the tax burden. Correct?
Yes. Can I also say just one thing? We've sort of started talking about will, but one of the things I do want to make sure that people actually have a will, because more than half of Canadians don't. They don't have wills. They don't have powers of attorney. And if you die intestate, then you've basically just decided that the government will be your biggest beneficiary. And there is a formula that they follow to disperse or to distribute your assets, which is probably not going to match what your own ideas were. So please. And I'm guilty of this. I pound the table with clients all the time saying, you need to have a will, you need to have powers of attorney. And then they turn around and say to me, well, or they used to, who did your will? And I'd have to, set the building on fire or run out or something because I didn't have one. I was one of those people. So please, aside from all the benefits of naming the charity and everything, just make sure you have a will and powers of attorney. They are so important. So sorry to sidetrack and go off on a tangent there, but that I want to make sure that we do get across, because you'd be surprised how many people don't.
Yeah. So of all of you on the Zoom call today, we really do hope that you have a will. As Sherilyn mentioned, if you don't have a will, the government will be your #1 beneficiary. So please, please, please go out and make sure you have a will, and you can consult folks like Sherilyn who can help you with not just that process, but the financial planning aspect of it. So Sherilyn, another question that came through is there a financial threshold where it makes sense to do a share donation versus a cash donation?
I don't know. There's not a financial threshold. I mean, you would do the share donation because that is the most tax effective way to do a donation if you are able to do so. So the charity gets more, you don't pay that capital gains tax. So it would always make sense to do that. Where you may not do that is if the shares are held in a registered account, so like an RSP or a RIF, you wouldn't do that. If by some chance you're holding capital property in a non-registered account, so in a taxable account, and it's all in a loss position, it also wouldn't make sense to do that. You would do that when you have appreciated shares to donate. So it's not necessarily a financial threshold, it's more of a situational, how are things currently structured for you, that would determine how you do that.
Okay, great. Another question we got is, if the beneficiary is named on financial investments, are they still taxed?
It depends on who is named. So if you, for instance, have an RSP and your spouse is alive and is named as a beneficiary, then those assets would potentially roll over to the spouse. It's when it goes down to, say, the next generation or to somebody outside the family, then there would be a tax implication in that instance, yes.
Great. Okay, so this next question really picks up from part of our earlier discussion. So someone asked, I've named a number of beneficiaries in my estate plans, but what's the benefit to letting them know that now? So let me just start off by answering, if the charity is a beneficiary, so if you have named, let's say, Trillium Health Partners or another charity, letting the charity know ahead of time helps in a number of ways. One, it just really allows us to stay in touch with you so that you know that you're giving to an institution that is credible, you have the latest information on how your donation might be used, and it also allows us to continue to recognize you. So if there's anything we can do to recognize you in life, we prefer to do that so that you can, again, get all of the positive benefits and feelings that come with making impact and giving that charitable donation. So Sherilyn, over to you to answer the question, is there benefit to letting beneficiaries know ahead of time that you've left them in their will?
So yeah, I mean, again, touching on our earlier discussion, again, you don't necessarily want to leave people surprised. And I've come across a number of situations, and it's unfortunate, sometimes it's with a larger estate, sometimes not so much, but where people can be left with, most of us would term a positive surprise. I've been left some money, but if they don't have the financial wherewithal to be able to deal with that, they don't have relationships with trusted advisors, they're already in a vulnerable position because they're dealing with grief and all sorts of mixed emotions. And then to have that kind of, something dropped on them like that, it can lead them to be vulnerable to people that maybe don't have their best interests at heart. They don't really know, they don't have the background to be able to deal with it. So, and financial, I could go off on financial literacy. I won't, but preparing somebody to know that there is something coming down the pike, and hopefully not for a number of years, but just to start getting them in the mindset of that someday they may be dealing with some of these situations, it will help to smooth that over and make sure that they are able and equipped to handle that.
I might veer off script a little bit here and just share a quick story from my own life. I had a family member who in their kind of 20s was left a sizable amount of money from an estate. Nobody in the family knew about it. They had very, very little financial literacy, and as a result, they just burned through the funds and then were kind of left, desolate afterwards. And if the person who left the funds in the estate would have at least told some of the family members, there could have been sort of a coming together to help the beneficiary there. So I am a big proponent of letting people know. Yeah. Because as you mentioned, I think for all kinds of good reasons, whether it's letting the charity know, whether it's letting the beneficiaries know, whether it's letting the family members know. There is probably more upside than downside to that based on my own personal experience.
And it's a conversation that you have once, and then you forget about it. Like, okay, it's done. I've done, it's no fun. Nobody looks forward to let's have a roundtable discussion about my death. Nobody wants to talk about that kind of thing. But once it's done, it's done. And again, it's that peace of mind, both for you and your beneficiaries, that, it's a greater chance that your wishes are going to be adhered to.
Great. So we are actually a little bit ahead of time. So Sherilyn, I just thought maybe I veer off script a bit, and I have one last question for you. Obviously, you are very, very passionate about this topic. You know a lot. You've helped many folks over the years. Are there any kind of closing thoughts or closing comments that you have that maybe we haven't touched on that you would want people to know?
I think just in terms of the overall estate planning, and just the kind of the mechanics of that, you want to make sure that when you do have your will, that you do review it every few years to make sure that things are still in line with your current situation and your wishes. I mentioned that my father needed to change his because some things had changed in his life. There can be marriages, there can be births, divorces, all sorts of things. One of the situations that I come upon frequently is when you've named an executor in your will, or you have powers of attorney, and let's say you just never review them. I've had situations where clients have said, oh, I guess my executor has predeceased me, so I better look into that. The other thing is, if you have a will and you've started out early and you name one of your friends, say you're 40 years old, your 40-year-old friend can look after your estate if you pass away. Well, let's say you live another 50 years and so is your friend. You're very healthy and far more healthy than I am. And now you want a 90-year-old to be your executor of your estate. It's really, there's an awful lot of liability. It's a huge job. So if you are named an executor, or you say of your parents' will, or you are thinking of who you want to name, make sure that you research the role and you are familiar with all the things that you have to do. There's like a list that we have at my office that's 70 to 75 different tasks. It is a thankless job. We have a saying that if you don't like somebody, name them your executor. So just make sure that is also part of your will review as you're doing that. Make sure that all the people that you've named and the beneficiaries and your charities and everything are still in line with all your wishes, because that can kind of throw things off when you go back and you realize, like, I've outlived the people that I've named in my will. I don't think there's anything other than that I would stress. And again, get that group of advisors working together and have people that you trust that you can talk to about it. That's the best thing. And then we can all make sure that it's set up properly and you get your tax benefits. You get to leave the money where you want to leave the money, to your charities, to your beneficiaries. And in the end, in the end, you're dead. But in the end, everybody you've left behind is comfortable and happy with the decisions that you've made.
So if I were to kind of recap a couple things, one, have a will. Make sure you have a will first and foremost.
Yes.
If you do have a will, make sure you review it regularly for both things like your executor and obviously the content of it. The other piece is that leaving a gift to charity in your will can be very advantageous. It doesn't mean that it will take away from your beneficiaries. And in fact, it can have a positive effect. And then obviously making sure that folks realize, regardless of where you're at, millions or not millions, everybody needs a will and everybody has the capacity to give to charity. So have I missed anything in kind of summarizing that?
No, you've been listening very well. Good job.
Thank you.
I would say if there is anything, like I understandably, again, because so many people's situations are different, it's very difficult to get into kind of minutia of set it up this way or do this or name this or have this. If there is something that you have heard that has prompted further questions, then send us those questions, because it's a lot easier on a one-on-one, rather than a Zoom call where everybody has different stories, that we can help you out with that. So I would encourage people, if there are things that that they've listened to that they want more information on, to reach out, and they can get that.
Great. And again, you can email us at foundation@thhp.ca. We can answer your questions. And if you also want an introduction to Sherilyn here, who can help, we'd be happy to make that introduction as well. So Sherilyn, I'm just going to kind of share a couple closing thoughts, but I just want to say a huge thank you for taking the time to do this today, for offering this free advice to our donors, and then also just a huge thank you for everything you and your family have done to support Trillium Health Partners. We couldn't be the hospital that we are if it wasn't for the support of folks like yourself and our community members. So just, again, a huge thank you for everything that you've done for us today.
Thank you. It's my pleasure.
Good. So just some closing thoughts. I want to say thank you to all of you who have joined. I hope this was helpful. At least it sort of sparked some thinking, and it would be remiss of me to not share that obviously we would love for you to consider including Trillium Health Partners in your will. We, as I mentioned, can't give the quality care that we aspire to give without the support of the community. As I shared earlier, whether it's building the new hospital, which we'll be getting started soon, whether it is the equipment within the hospital, whether it is even responding to crises like COVID. While the government pays for a big chunk of our healthcare, not everything is covered, and we do rely on the support of the community. So I want to say thank you, because probably many of you on the call have supported us in different ways over the years, and planned giving or giving a gift in your will is one more way that you can consider us. So again, we will be sharing a short survey following the webinar just to get your thoughts. We always want to improve this, make sure that we're giving you some of the latest information, both on philanthropic giving, but also what's happening at the hospital. So please, if you do have the chance to fill that out, it's just really helpful for us so we can continue to improve these. The last thing I want to say is that all of us, if we happen to leave the house and go out and about, we have to wear a mask. And I just wanted to share this great mask with you, and I will demonstrate it here. What you can see is that I'm smiling, and you can see my lips through it. And these are masks that actually have been made by a family in Port Credit, and they're called the Como Foundation. And what's great about these masks, and you can get them personalized in any type of fabric that you want, they were created for folks that are hard of hearing. And it's amazing, even myself, who isn't necessarily hard of hearing, we depend on lip reading so much, and it's been challenging, I think, with COVID with these masks. So if you're interested, it's our very own Max and Sarah from Mississauga created these masks. They started the Como Foundation. They are selling the masks. The masks benefit Trillium Health Partners, a proceed of the masks. So if you are interested, you can go to trilliumgiving.ca/Como, C-O-M-O. And when you buy these amazing masks, you're supporting Trillium Health Partners as well. And I've just found every time I wear that mask, people are always asking me, where did you get that? And they love the fact that they can see you smile, they can read your lips, and I also get comments that women can wear lipstick again if that's of interest to you. So again, I just want to say thank you to everyone who's joined us. A huge thank you again to you, Sherilyn, and we are so appreciative of all of your support. We couldn't do what we do here at Trillium Health Partners without you. So thank you so much. And I just wanted to wish you a wonderful rest of the day. Thank you again.